I think it's recording now.
Yeah, confirming to say it's recording. All right, let's go ahead and get started. Before John kicks this off, just wanted to say hello and introduce myself. I'm Elizabeth Duffield. I'm on the Nashville Entrepreneur Week committee. And we're really grateful to have John here today to give us the latest and greatest on PPP. It's been changing a lot. I'm sure it's been really confusing for everyone. And John has established himself as one of the experts, if not the preeminent expert on PPP in Nashville. So we're grateful to have him with us. I'd also like to say a thank you to the NBIC National Business Incubation Center for sponsoring this and helping organize. They're a great partner to National Entrepreneur Week. So thank you again, and thanks, John. Feel free to kick it off when you're ready.
Perfect. Awesome. Thanks, Elizabeth. Yeah, first and foremost, thank you to the NBIC and Nashville Entrepreneur Week. I know it's been a crazy few months here for those in the event world, but just kind of pivoting and being entrepreneurial and having the opportunity to kind of put things on virtually for the Nashville community, I think is fantastic. Obviously, it's a fully volunteer effort. Nashville Entrepreneur Week is, and they do an incredible job. So really, thank you so much for having me. Today, as Elizabeth mentioned, we're going to cover kind of the latest and greatest in all the PPP loan forgiveness. There's lots and lots going on from various changes, but we'll dive into those changes, then also think through kind of the ways that you need to be recording and documenting everything and all of your PPP spend, so you're not facing potential audits down the road. We definitely want to kind of prepare you going into this, and that's kind of the idea for today. Just very quickly, I work with Compass East, Director of Financial Strategy. We deliver finance and accounting, tech-enabled finance and accounting services for growth stage companies. We're focused on B2B SaaS, technology, high-growth services, healthcare services. And we've also been heavily involved in the PPP loans as we're really supporting our clients, as we navigate through COVID and everything else. So lots of recash forecasting, building out scenarios, and then making sure that our folks have the proper PPP loan, have received all of their loans, and really advising on that moving forward. So for today, really want to just kind of really simplify the PPP regulations. Obviously, it's extremely confusing and can be at times. So really want to hone in on all, like I said, all the latest and greatest. We'll run through a brief timeline of the PPP, talk through all the recent changes from the Flexibility Act, walk through kind of how you calculate forgiveness and the things you should be looking out for, and then really the actionable steps you can take to properly document and track all of your PPP spend. Ideally, we'll have some time left for Q&A here. Hopefully we can run through this in about 30 minutes or so, and then we'll have some time left at the end. And then lastly, we'll make sure to share our PPP forgiveness calculator to all attendees today. So just some quick context, so I think it's important. Obviously, the PPP has been sort of the proverbial plane being built in midair, driven by the SBA. And so for some context, in 2019, the SBA issued $28 billion worth of loans across kind of all of their offerings, the 7A, micro loans, et cetera, express loans, et cetera, to over 63,000 small businesses. In comparison's sake, the PPP program, which essentially was established in about 2 weeks, all the applications and guidelines, has now issued over 70 times as many loans and 18 times as much money in the period. So it certainly was going to have some issues kind of rolling this thing out, but ultimately we've seen some bumpy roads, and so kind of thinking through some of that timeline, it feels like it's been about 3 years. It's only been about 3 months since this program has started. Obviously came out of the CARES Act in late March, and then really at the end of March, the initial PPP application was issued. And you had about 12 hours there where the SBA provided guidelines to lenders, and where the expectation was that they were going to be live on that Friday on the 3rd. So there's obviously some pretty major issues with the initial rollout, just around E-Tran and some of the systems being down. If you remember, like Wells Fargo stopped issuing loans, and many of the banks were really focused on just their current clients and not other clients or not other customers as well. So all of that was exhausted in about 2 weeks. That initial 349 billion tranche. You started to see news reports coming out of a bit of favoritism, but also much larger companies and getting larger loans. There's quite a bit of backlash publicly, and a lot of those companies returned their funds. We got the second round of funding announced, and then additional oversight guidance around all the forgiveness requirements, all the interim final rules kind of in between. And then most recently, the PPP Flexibility Act, which was passed about 2 weeks ago, really provided some additional flexibility as well. So lots of moving pieces. It feels like it changes every week, and you're constantly staying updated. So again, the goal is to really simplify things down, try to understand exactly what's happening, what's going on, and then provide you some actionable action steps you can take essentially to manage all the documentation, which is going to be incredibly important. So to kind of recap what's changed, specifically over the last couple of weeks, the biggest one being the covered period. So the period at which you had to spend your funds once you received the loan was extended from 8 weeks to 24 weeks, which was hugely important. We were, really advising a lot of our clients who hadn't restarted their business, maybe had gotten a loan, maybe you're 5 or 6 weeks in, but your business might not be open yet, which, it didn't necessarily make sense to spend all of that money within that 8-week period to receive full forgiveness if you weren't open. So we were talking a lot about, save that money. It's a 1% loan essentially. If you're not forgiven, it's a really good deal, and make sure that you use that money accordingly as you start to ramp the business back up again. Now so the change to 24 weeks is a fantastic development, because it really allows companies to extend that runway essentially that you have to spend those funds and still receive full forgiveness. And that also the deadline at which you had to rehire employees that were furloughed or laid off originally was June 30th, and now that has been extended to December 31st. So you have an additional essentially 6 months to rehire those employees to the same wages and headcount levels in order to still receive full forgiveness. The other major one was the payroll cost expenditure requirement. It dropped from 75% to 60%. This was another big issue. Was companies were running into the fact that they couldn't spend all of that money on payroll costs and hit that threshold. So by reducing that down to 60%, you have a little bit more flexibility now on the expense side if you need it to essentially, like I said, run and restart your business. You don't have to spend all of that money on payroll quite yet, and we'll talk through how that looks from a calculation perspective. Also, loans that were made prior to June 5th, you still have the option to use the 8 or 24 weeks covered period. So that is still there if you have received a loan, a few weeks or months ago. But post June 5th, in the latest ruling, it said you actually have to use the 24-week option if you received it, June 5th and on. So that's a little bit of a nuance there. The main thing, one of the reasons why you might not use the 24-week option if you have the option, is the fact that there's certainly still quite a bit of uncertainty over the next 6 months with your business, and making sure that you keep and maintain headcount at those levels over a 24-week period versus the 8-week period could be a reason why you select the 8. But generally, the 24-week is going to be a better option for most businesses. Also, too, there were some issues with in that rehiring period. Many employees might have refused to come back to work, even though companies wanted to bring them back. So there were some clarifications essentially on, if you have a written offer as a business owner to rehire that employee and they refuse, or were fired for cause or voluntarily resigned and chose not to come back, essentially you're not going to be penalized for that headcount number. So there's a couple steps you have to take there. That written offer is very important to document, make sure you have, but also you have to reach out to the unemployment office and essentially say that that employee did refuse to come back as well in order to get fully forgiven here too. So that's a little bit of a nuance. Also, the term, so the loan term was always set at 2 years. So for the non-forgiven portion, so essentially if you do have a portion that's non-forgiven, it's a 2-year term that has now been extended to 5 years for those loans made after June 5th. If you received a loan prior to June 5th, you still have an opportunity to renegotiate with your lender. They said essentially to reach out if you'd rather pay that over 5 years instead of 2. Still stays at the 1% interest rate, however. And then from the deferral period as well. So originally that non-forgivable portion was always a 6-month deferral, so you didn't immediately start having to pay that loan back. That has changed to essentially the date when your forgiveness amount is determined. And so essentially during this application, so you're spending there's 8 or 24 weeks over the period of time. You actually have 10 months until after that period is over to apply for forgiveness. So you have some flexibility there, potentially up to a year to defer payments on that loan. And I say a year because the bank essentially has 60 days once you submit an application to determine what your forgiveness amount would be. So there's a little bit more flexibility there on the deferral side. They also established an alternative payroll method, which essentially was more important for the 8 weeks. Essentially, if your payroll runs, weren't aligned with that 8-week window, and there was some incurred payroll costs that fell outside of that covered period, those incurred payroll costs were eligible. Essentially, establish a slightly alternative payroll method for you to include those incurred payroll costs as part of forgivable payments. Obviously, that becomes less important when it's with a 2.5 month loan is extended over 24 weeks. So again, just really focus on the 8-week piece. And then lastly as well, if you are still looking to apply for a loan, you only have until June 30th for any new application. So that was finalized as part of the most recent legislation. So you've got about 2 weeks here if you are still looking to apply for a new loan. And just really quickly kind of recapping some of the eligible payroll costs, because there were a couple changes here as well. But salary obviously capped at $100,000 for your employees, your hourly wages, but also included furloughed employees were eligible for forgiveness. Any bonuses that are capped at $100,000, including hazard pay as well. Commissions, cash tips, your leave, any severance allowance payments, benefits, so your employee, your healthcare coverage, insurance premiums, and also retirement, so 401k payments as well are all eligible. If you're a sole proprietor or 1099, obviously your wages or from self-employment are eligible, and we'll talk a little bit about the ownership replacement payments in a bit, but and then also your payments made on state and local taxes assessed on compensation of employees as well are all eligible payroll costs, and those are the numbers that you have to hit for the 60% requirement. And then on non-payroll costs, so that other 40% that you have to work with, you can make on mortgage interest payments, not including the principal, rent payments, utilities, so electric, gas, water, telephone, internet, transportation, and then any equipment leases, copier leases, vehicle leases, all of those are eligible as non-payroll costs, with the caveat that any of those agreements had to be in place prior to February 15th, 2020 to count there as non-eligible payroll costs. So just on the forgiveness side, so just in understanding kind of essentially what you're going to be, potentially penalized for on the reduction amounts, your loan forgiveness can be reduced in 4 different ways. So essentially it's either a decrease in your FTEs during the covered period compared to the look back period, which we'll talk about in a second, a decrease of more than 25% in wages for FTEs during the cover period. If you spend less than 60% of the loan on payroll costs, there's a reduction calculation as well. And then also, if you did apply for a economic injury disaster loan, which is a whole separate conversation, but if you did get an advance on that and also got a PPP loan, that advance, that amount essentially would be reduced from your PPP forgiveness calculation. And so the FTEs as well will be proportionally decreased, which I'll kind of show you here in a second. So one other kind of major update recently was just giving guidance on how to define an FTE for the forgiveness calculation purposes. Essentially, there was some potential back and forth on whether or not it was going to be based on 40 hours or 30 hours like the Affordable Care Act. But it was fine. It was determined that 40 hours, essentially all of this would be based on 40 hours. So, what you do is per employee per week, you essentially total up the number of hours an employee worked. If you worked more than 40, it's essentially capped at 40, and that will count as one FTE. And then essentially if you work less than 40, you just calculate it proportionally. So if you work 30 hours over the, 30 hours divided by the 40, you're going to get, it's a 0.75 counts as an FTE. 10, it counts as 0.25 of an FTE. Or you have the option essentially to say all part-time employees are just counted as 0.5, regardless of the number of hours worked. So that will just be dependent on what's in your best interest based on those headcount numbers. So that's how you calculate the actual FTE count. So that will be essentially used in both the numerator and denominator here in your forgiveness reduction calculation. So, so the main thing here is what you're going to do is take your average number of FTEs for the cover period. So whether you had the 8 weeks or the 24 weeks, you're going to add up those hours, you're going to calculate the number of FTEs that you have, and then you're going to take the average per month of FTEs for that cover period and divide it by either the average of the FTEs for February 15th, 2019 through June 30th, 2019, or you can use the beginning of January 2020 through the end of February 2020 as your denominator. Essentially, again, just choosing which one is better for you based on the situation. And then, so that ratio, so let's say you had, half as many employees in the cover period as you did in the look back period. So that 50% you would multiply by your total loan amount. So let's say you had a $100,000 loan. Essentially, your forgivable portion is now reduced to $50,000 because you're just taking that ratio and multiplying it by your loan amount to essentially get to the number at which your loan is reduced. So if it's 1-to-1, you're getting the full 100% amount. If you reduce it by whatever percentage, you're just multiplying it by your total loan amount to understand exactly what your forgiveness number is in this FTE headcount reduction calculation. So again, this is just based on if your headcount has changed over the different periods. And then also too, just to mention as well, you still have until December 31st to get that number back up to match the previous levels. And you won't be penalized even if over the next few months you don't have the same number of employees. It just has to be back up to that number by December 31st. And in the same vein, basically a wage reduction of greater than 25% is another potential penalty that you can run into. So similar kind of calculation, you're just taking the average wages, both hourly and annually, for your cover period, dividing it by the same two look-back periods, whichever one's better for you. If that number is greater than 75%, you won't be penalized for a wage reduction. Essentially, you didn't reduce those average wages by more than 25% in those comparison periods. If the result is less than 75% or 0.75, essentially what you're going to do is just multiply the denominator number by 0.75 and then subtract whatever your average wages were in the covered period. And that difference, essentially that difference is, so the wages that were in excess of 25% will be your reduction amount. So let's say that's 10,000 is that number. You reduced more than 10,000, or in addition to the 25% reduction, there was an additional 10% that was reduced, or additional 10,000 that was reduced. That $10,000 is your reduction number as it relates to forgiveness. So the other thing to mention as well is you can't be penalized for both FTE and the wage reduction. So let's say you cut hours in half to your employees. Obviously, their wages would have gone down by half as well, but you wouldn't be double penalized. So you wouldn't be double penalized for both the wage reduction and the FTE headcount. It would just be the FTE headcount. So that was something else that came out recently as well. And then lastly, the other, obviously, the payroll cost at 60% level. So this is the originally it was the 75% threshold. This has been reduced to 60%. So you have to spend at least 60% of loan proceeds on eligible payroll costs in order to receive full forgiveness. You can exceed that if you want, but you at least have to have 60%. And then kind of how the forgiveness calculation will work. So for example, if you have a $200,000 loan, you would need to hit $120,000 in order to hit that 60% threshold. And if you do, that loan is fully forgiven. Now, let's say you used only $100,000 on the payroll cost piece of that. So you only hit 50% essentially. So you were less than 60%. What you would do is just simply take whatever was spent on payroll costs for that period. So we spent the $100,000 on the eligible payroll costs, and you divide it by 60% to get the eligible amount for forgiveness. So in this scenario, you only hit the 100,000 instead of the 120. You divide that by 60%. So $166,000 is eligible for forgiveness, and the repayable portion of your loan becomes that 33% difference of the $200,000 loan. So that is something, again, like you want to focus on hitting that 60% threshold. So you're not, and now that you have the 24 months, you should be able to do that relatively easily, versus trying to rush everything out in 8 weeks when you had the your loan size was determined by 2.5 months originally. So that's basically what happens in the payroll cost reduction. And then so specifically for sole proprietorships and 1099s, I know there's probably a few of you in here. Basically, this is all based on your 2019 Schedule C tax return. You obviously don't have payroll, but your original loan was determined by your average net profit originally. And so essentially what happened was the owner replacement claim, the owner compensation replacement was something that was recently part of the interim guidance. And what it's saying is basically you get, as a sole proprietor, you're getting 8 weeks worth of your net profit forgiven without having to spend it on anything. So because you are essentially, that's essentially your salary as a sole proprietorship, your owner compensation replacement is essentially just calculated by multiplying your total net income from 2019 by 0.154, which that will determine kind of what that replacement would be. You have limits of up to 100,000, so there is a cap on that level. But for those with no employees, your maximum possible PPP loan was $20,833, and so that $15,385, which is annualized over the 8-week period, as it relates to an annual salary of $100,000, is automatically eligible for forgiveness as your compensation replacement, and the remaining piece of that can just be used on the approved expenses. The approved non-payroll expenses over the 24 weeks for full forgiveness. So that's kind of important if you don't have employees to look at. And so, yep.
We've had a number of questions come in, and I'd love to answer them live.
Sure.
Great. So the first one from Julie: if you receive a loan before June 5th and therefore have the choice of an 8 or 24-week period, do you have to officially choose which you'll use, or which period you'll use by a certain date?
There was no guidance on the specific date, but absolutely, you absolutely have to choose, but reach out to your lender, to whoever your SBA lender was, and make sure you make that determination. But there was no specific date at which you would make that, there was no deadline, but the 8 weeks is likely running out, potentially, if you already have the loan, essentially. So so that would be the date essentially that you would have if that 8 weeks runs out.
Great. And then another question from Joe: for 1099s, is payroll considered gross revenue for the months?
So it's based on, again, your Schedule C tax return. It's your net profit that you had on that tax return. And originally, you basically had to take that net profit divided by 12 to get your monthly average. And then the original loan was taking that monthly average and multiplying by 2.5 in order to get your loan amount. So that's how that calculation worked. And I think that's kind of what you were asking, but that's basically what I got.
Awesome. And then, can pre-June 5th loans be used over a period between 8 weeks and 24 weeks rather than one or the other? For instance, can I use the funds within a 14-week period and then apply for forgiveness?
No, it's one or the other. So you have to choose one or the other, and you can't. Yeah, so it's either or.
Okay, great. And we're getting quite a lot of questions, which is awesome. John, how far are you into the presentation? Do we want to hold off till the end, or
yeah, maybe hold off to the end. I probably have another 5 minutes or so. I just want to walk through kind of the documentation side of this to make sure that you guys are tracking everything appropriately.
Awesome.
Yeah, I'll speed it up a little bit too. So again, sort of the SBA oversight is an interesting piece here. So there's 2 conflicting statements recently. We're telling all of our clients to document everything, because while, recently a safe harbor was created for those that were less than $2 million loans, and they were certified as being made in good faith and affected negatively by COVID, which was great. The SBA was essentially saying they're going to focus their auditing efforts on the larger loans. Most recently, they also said in the guidance that they essentially have authority to review any loans that they deem appropriate, of any application, of any amounts, of any really anything at their discretion. So that seems like 2 conflicting statements. Essentially, even if you are sub 2 million, you still are subject to some of these reviews. And you also have to keep documentation of everything that's related to PPP for at least 6 years after the loan is forgiven or repaid. So document everything. And so just kind of quickly here, just some quick action steps you can take if you haven't already. To track the spend, you could potentially open up a separate bank account if you wanted to, and put those funds in the bank account, and essentially anything out of that bank account becomes your essentially ledger. If you don't want to do that, you can establish a class in QuickBooks Online or tracking category in Xero to quickly track all of your expenses, and all of that will quickly roll up into a P&L where you can run a report, and all those expenses will be tagged to PPP and kind of serve as your overview document. And I'll show you that really quickly here in a second. Also, obviously set up a dedicated shared folder of whatever repository you use, and then we're saying save every single invoice and then every piece of payment support for each expense, and then on a weekly basis, just run the transaction report, kind of see how those expenses flowed out, and then save every single piece of documentation that is related to an invoice, and then the evidence of that payment. So whether that's like a canceled check or a statement, a bank image statement of that cleared transaction. So make sure to keep all of that for every single transaction you make. This is just super quick. Again, you can we'll share all of this afterwards, but in order to set up tracking categories in QuickBooks, you just go to advanced settings, turn on, track classes here. And then for any invoice or expense that you have in QuickBooks, essentially you're just going to tag it with your class expense over there on the right. You create a new PPP class, and then every expense or invoice you can tag with that PPP class. And then once you run a report, let's say you want to run a profit and loss statement by class, that will automatically pull in all the specific PPP expenses in a new column on your P&L, and you can drill down into each individual transaction if you want to, or run a transaction report by class as well. So that's a very quick and easy way just to essentially you're tagging every expense, then you can quickly roll it up and kind of see what your summary is for the different period for the period of time. And then just what documents do you need specifically? Obviously for payroll, W-2 payroll summaries and summaries by employee. Every time you're running a payroll, your payroll register that detailing, all the pay and the total cost of your payroll just on aggregate. Obviously, and then the bank image that ties to those payments. Same kind of thing with healthcare and retirement benefits, making sure that you have all of your employer paid breakdowns, all the premium invoice, healthcare premium invoices, all your 401k and cost invoices, all those canceled checks or cleared images for support. And then same thing with rent, mortgage interest, and utilities as well. Just making sure that for every transaction that you're creating a document that backs that up, and then also the fact that there's a transaction that happened. So that's it, just in kind of quick summary here. Flexibility Act was a good thing. You're allowing for 24 months to really spend that money and restart their business. Companies restart their businesses. The December 31st date, allows you more time to rehire those employees to get back to full forgiveness levels. You still have the option, if you like, we kind of just talked about on the question, to take the 8-week window. Potentially the longer window creates some issues for maintaining those employment levels, depending on the uncertainty aspect of it. But it's either or. So it's 8 or 24 weeks is your cover period. The 60% payroll cost we've gone through. Documentation is important. We touched on a little bit, but bonuses are actually a way you could potentially hit those payroll cost thresholds if you wanted to, up to $100,000 annually. So those are eligible. And then, if you want to extend your term for those that received loans post June 5th, talk to your lender. And then also June 30th, the last day to apply for any new loans. So that was it. We can jump into some more of those questions if
awesome.
like.
Thank you, John. Do you have the Q&A up in front of you?
I do.
Awesome. Do you want to go through them?
Yep. All right. So how does the 24-week period work for 1099s? I guess probably need a little bit more detail on that one specifically, just in exactly what you're asking there. If you want to maybe resubmit. So the EIDL question. So you can absolutely. So you receive. It sounds like you received both the EIDL and the PPP loan separately. Just because you received the EIDL loan, as long as you're spending the PPP money in all the appropriate ways, you can still qualify for the 60% forgiveness on the PPP side. EIDL loans have to be paid back except for the advanced part. So they're kind of two separate pieces there as well. Yeah, so if you're an LLC with K1 income, so you follow the sole proprietor rules there. If you are I'm sorry, I probably should be repeating the questions too. If you have W-2 employees so if you have W-2 employees and 1099s, can you apply for forgiveness for the 1099 or just the W-2? Just the W-2 portion. So the 1099s and sole proprietorships essentially have to apply on their own. based on their personal tax return. So they can still, they can receive their own PPP loan as a 1099. But if you are a business owner that employs some 1099s, that portion of those wages are not part of the PPP calculation. If you apply for do you still have to take the amount off the top? I think you're referring to the advance. If you apply for the emergency EIDL loan, after you apply for the PPP, you still have to take the amount off the top. Again, I think that's the advance that you're referring to, but essentially that advance that you got will be taken out of the forgiveness calculation. So if you got a $10,000 advance from the EIDL and you also have a PPP, your PPP forgiveness will be reduced by $10,000 on the PPP side. Our payroll non-eligible expenses, the listing, if not, they're listed with allowable expenses. So all of the payroll non-eligible expenses and payroll costs are the same for both business owners and sole proprietorships and 1099s. So those don't change at all. But except for that owner compensation piece that I mentioned, a little bit different, obviously, since there's not a payroll cost calculation, but the non-eligible expenses are the only approved expenses for forgiveness. You can use the loan, you can use the loan for other expenses, but you just won't be forgiven. So that will just turn into a forgiven portion or a non-forgiven portion. Is health insurance considered favorable wages? Let me read this one straight. So essentially, employer retirement and healthcare contributions made on their behalf, on 1099's behalf, are eligible for 1099s. So that's in there. If I'm a sole proprietorship who claims home office deduction in a house that I rent, can I pay full rent with my PPP money as part of the, yes, so that is, you know, as long as it's part of your, as long as you essentially write it off on an annual basis, yeah, you can use that money to pay for that rent based on your based off your situation. No, the 24-week period does not impact the 852 owner compensation calculation, but so you can potentially spread those owner payments out over the 24-week period, but it doesn't change the amount essentially that you got from your net profit. If you did not include the ELD advanced GDP. Yes. So yeah. Well, hold on. If you did not include the EIDL in your calculation because you received it after you filed your PPP, you did not know you're receiving it. Can you apply? So, well, no. So that it doesn't matter on timing on that. If you did get an advance on your EIDL, it goes into it's reduced from your forgivable portion of PPP. So.
And then I'm seeing a couple other questions in the chat. We have one from David. Where do I get the loan forgiveness paperwork? I downloaded and completed a form I found on the SBA website. Is that the correct form?
Yeah, so it's all on the SBA website. Your best bet is to Google SBA loan forgiveness form. It just got released. I think that was about 2 weeks ago. And then it actually just changed. I believe there was a new update a couple days ago, as well as the Flexibility Act came out. So just go talk to your lender as well. They'll certainly they'll have all the applications and forms that you need. That's kind of the latest and up to date. But consistently check it because it has been changing almost weekly, depending on some various updates. But it's all on the SBA website.
Great. And then I have another question from Jessica. If you're a sole proprietor LLC with full-time, part-time, and contractors, where would we fall with forgiveness? Only employees?
Yeah, only employees. So if you're, say it one more time. I don't see the questions.
In the chat, not the Q&A, but the chat one.
Okay, gotcha. Just make sure I got that right. Oh, not the Q&A. Not seeing the chat. Might have to.
Here, let me. Oh yeah, she just added it to the Q&A, so it should be showing up there now.
Yeah. So if I use owner compensation in the calculation for my PPP loan, do I have to make sure I pay myself the same amount for 24 weeks in order to maintain? Yeah, you just have to use whatever the calculation you use to get your PPP loan. You can spread it out over the course of the number of weeks. So either you can flatten it out, or you can potentially do a one-time payment as well, as long as it doesn't exceed that $100,000 annualized limit as well. And then, okay, what if you're sole proprietorship with an LLC with full-time, part-time contractors? Oh, and contractors. So the full-time so the full-time and hourly employees would count. The contractors or 1099s would not count towards your payroll cost forgiveness calculation. I'm a sole proprietor. I got a PPP loan in May. When do I have to submit the forgiveness application? Okay, so lender doesn't know how to complete the form. Yeah, so again, so I'd go to the SBA website. Your lender should know this. I mean, that's definitely something that they should know in terms of completing the application at this point. Again, like the forgiveness final application just came out, but you actually have, so even if you got the loan in May, you have 10 months until after the covered period ends. So even if you had the 8-week window in May, you still have an additional 10 months whenever your term is up to submit the forgiveness application. So you've got some time here. It's a little bit of a lot of moving pieces here potentially, but they might not know how to complete it yet because there's probably some additional guidance that still needs to happen on their end, but they should have the form at this point and have like a basic understanding of it. So
do you see the question again about the?
Yeah. So this one again, like I don't know if I want to go 100%. I'm just unsure on sort of the rent. I don't think you can't pay your full, probably just the portion that of your deduction. But I don't want to give you a wrong answer on that one. Actually, I will circle up and figure that one out, because if it's on your house, that shouldn't be eligible, but maybe on the office deduction piece.
Awesome, John. Thank you so much. This was really, really informative. And I know we're right at the time here, but John has his contact information up here. We will be sending out this recording following this webinar. So look out for that if you have any clarity or you want to review what John discussed. But again, thank you to everyone for joining us today.
Awesome. Well, thanks so much for having me. Again, feel free to reach out with any questions or follow-ups here. We'll reach back out with the recording, this deck. I'll share this deck with y'all. And again, we'll make our forgiveness calculator available to all attendees as well. So we will send that out in the next few days. Thank you very much.
Thanks, John. Let's see. Depriya, do you think you